See, today we have to start the controlling class, controlling component. And I have sent this material to everybody. I hope everybody should have received the material. One second. Yeah, so controlling. So this component is used to provide the information to the management for the performance analysis and decision-making process. One second, I'm sorry for the interruptions. So this component is used to provide the information to the management for the performance analysis and decision-making process. So this component is mainly used for internal reporting. That means here you take any company, we have three levels of management: middle level management, top level management, and lower level management. So the lower level management does not require any information. But here we have the middle level management and top level management, which requires a lot of information. See, the middle level management includes departmental heads. So these departmental heads are very much interested and they're very much in need of performance analysis of their respective departments. So in order to analyze their performance, in order to uh, analyze the performance of their departments, they need some information. That information is provided by the controlling component. Similarly, we have the top level management. The top level management is always concerned with strategic decision making process. That means strategic decision making process means strategic decision means the decisions which have the long-term impact on the profitability of the company. So for that purpose also, they need some information. That information is completely provided by the controlling component. Say for example, we are producing and selling three products: product number one, product number two, and product number three. So this year, the management wants to increase the production capacity of a particular product. For that purpose, right, they need some information. Like what? See, if they want to increase the production of any product, first they have to see for which product they are having the demand. But for all the three products, they are having equal demand. And they have to see for which product we have the additional production facilities available. So we have the additional production facilities available for all the three products. Like that, all the information or all the parameters are equally available for all the three products. But apart from this, they need the most important information, that is the profits contributed by each of the product. If they know what is the profit earned by each of the product, then they can increase the production of that product which is contributing more profits to the company, right? See, always the goal of any company is to maximize the profits. So in order to increase the production of a particular product, they have to know what is the profits contributed by each of the product. For that purpose, we cannot use the P&L account and balance sheet which we prepare in FI, because the P&L account will display the total picture of the total profit of the company as a whole. The P&L account will display the total profit of the company. Company means general sense, but in SAP company code. So FI P&L account will display the total profit for the company code as a whole. We cannot find the profit according to products in the P&L account because it is not legally required. So the P&L account and balance sheet are always prepared to meet the legal requirements. But in the legal requirement, there isn't any specifications to bifurcate the profits according to products. That's why we don't concentrate on that aspect in the P&L account. So the P&L account will display the total picture, the total profit of the company as a whole. But here, the management wants to know what is the total profit contributed to each of the product. For that purpose, we need to depend upon the controlling component only. So in the controlling component, there is one module which is called profit center accounting. So using the profit center accounting, we can analyze the profits according to products or product groups or regions or any other criteria required by the management. So here what I mean to say here is, this is the significance of the controlling component. So the financial accounting component is mainly concentrating towards the compliance of the legal requirements. But controlling component is mainly concentrating towards the information requirements of the internal management. That's why this FI component is called external reporting tool and CO component is called internal reporting tool. And for FI, there is a compulsion. Compulsory, we need to prepare the P&L account and balance sheet according to legal requirements. But in most of the cases, there is no any legal requirement for the CO component. There is no any legal requirement for the CO component in most of the cases. But in some cases, right, the CO component is also required. Say, for example, if you take India, right, we have the Companies Act. So according to Section 233B, according to Section 233B of Indian Companies Act, certain companies should compulsory maintain cost accounting records. So certain manufacturing companies should maintain cost accounting records according to the legal requirements of Section 233B of Indian Companies Act. So like that, in that case, they are mandatory, just like FI. But in most of the cases, the controlling component is not mandatory. Even it is not mandatory as such, right? It is having a lot of importance more than FI, as far as our consultancy jobs are concerned, right? Because see, the management is not worried much about the legal compliance because we have the accounts department, which are filled with cost accountants, chartered accountants, company secretaries, and so on. So the accounts department will take care how to comply with the legal provisions. But as a major stakeholders, management means always they are the major stakeholders, right? So as a major stakeholders, they are very much worried about the profitability of the company. Always they are worried. They are worried much about the increase in the profits, how to maximize the profits, how to reduce the expenditure, how my company is working, how each department in my company is working. So these are the elements which worries the management. So for that, they need some information. So that information is completely provided by the controlling component. That is the significance of the controlling. So the controlling component is always called internal reporting tool. Clear? So here, this controlling component is always concerned with analysis of expenses and revenues. The controlling component is always concerned with analysis of expenses and revenues. Why so? Here, the expenses and revenues are P&L account items. So we don't have anything to do with the balance sheet items. Why so? See here, every company resources are very much limited. Every company resources are very much limited. With the limited resources, they want to maximize the profits always. So for that purpose, they always want to analyze the expenses where they can find the ways to reduce the expenditure. By reducing expenditure, we can maximize the profits. Similarly, in order to maximize the profits, always they want to analyze the revenues to find the ways where to increase the revenues. So by increasing the revenues also, we can maximize the profits. That means either by increasing the revenues or by reducing expenditure, we can maximize the profits. That's why this controlling component is always concerned with analysis of expenses and revenues, right? So let us take one simple small example. So I'm an employee, right? I'm working as an accountant, right? So as an accountant, every month I'm getting a salary of 50,000 rupees. And to get the salary of this 50,000 rupees, every day I'm working 12 hours, right? Now, due to some reasons, right? From next month onwards, so okay, sorry. With the current salary of 50,000, presently I'm able to save 10,000 rupees per month. right? But due to some reasons, from next month onwards, I need to increase my savings to 12,000 rupees. Means I need to save extra 2,000 rupees in addition to current savings of 10,000. Then as an employee, what are my resources? My income resource is only my job. But here I want to increase my revenue. Then what is the alternatives to me now? First of all, I have to verify whether is it possible to increase the salary or whether it is possible to increase my revenue. It is simply impossible because even to work, even to get a salary of 50,000 per month, I'm working 12 hours a day. So there is no chance to work more, or there is no even chance to go for some other small job also in my part time or in late evenings. Are you getting my point? So the chances of increasing the revenue is ruled out, right? Then what is the other alternative? I have I have to analyze my expenses. I have to analyze my expenses. So I have to analyze when I analyze my expenses, that means in a month, I prepared a list of all the expenses incurred by me. So in that list, I came to know that I'm spending 2,000 rupees every month, say every week on my entertainment. I'm spending 2,000 rupees every week on entertainment. Now I stopped here. Now I think I analyze like, is it really necessary to spend 2,000 rupees every week on my entertainment? Yes, it is true. It is necessary. It is very much necessary. Every day I'm working 12 hours in my office itself. It takes 2 hours to go to office, and again it takes 2 hours to come from the office to my home. So 16 hours. And I have small work in the family. So I'm not able to get the time even for sleeping. So I'm working very much hard. That's why entertainment is very much necessary for me. But at the same time, I want to increase the savings. That's why what I have done is, instead of going for entertainment every week, I have taken a decision to go for entertainment every alternate week, so that I can get the reboost from my, so that I can get reboost for my work in the next week, so that at the same time I can also save 2,000 rupees. Are you getting the point? So instead of going for entertainment every week, right, I have taken decision to go for entertainment every alternate week. So how could you able to take this decision? How you have been able to take this decision? Because you have analyzed the expenses. Now you can increase the savings. Similar is the case with the companies. So the resources of the company are very much limited. With the limited resources, they want to maximize the profits. For that purpose, they will analyze the revenues or expenses or both to maximize the profit. So that's why it is always concerned with analysis of expenses and revenues. Okay, so the expenses and revenues are always P&L account items. So we don't have anything to do with the balance sheet accounts. That is, only general ledger accounting is concerned with the controlling component, right? So here I told you the controlling component is always concerned with analysis of expense and revenues. So how the expense and revenues are flown into controlling. Here, this is called data flow. In the financial accounting, we have the general ledger accounting, right? So in the general ledger accounting is the main ledger. You know that, right? So this general ledger accounting is integrated with all the other modules of SAP. Say, for example, metals management is integrated with the general ledger, sales and distribution is integrated with the general ledger, production planning and control is integrated with the general ledger, and HR is integrated with the general ledger, plant maintenance, asset accounting. Like that, all the other modules of SAP are integrated with the general ledger. Then each module is used to process the expenses and revenues in each department. That means in every department, every day, some expenses are incurred and some revenues are derived, right? So whenever the expenses are incurred and revenues are earned, they are entered by the respective end users in the respective departments. Because of the integration process, whenever the expenses and the revenues are entered by the users in the respective departments, they are updated in the general ledger accounting. That means they are posted into the general ledger accounting in the form of GL accounts. In the general ledger accounting, you maintain the GL accounts for all expense and revenues. No? So because of the process of integration, whenever the expense and revenues are posted in the respective modules, they are posted into general ledger accounting. That means in the general ledger accounting, all the expenses and revenues of your company code are existing in the form of GL accounts. Clear? So all the expense and revenues of your company code are available in the general ledger accounting in the form of GL accounts. Then from the general ledger accounting, the information is taken into the controlling component. This is called data flow. So then the general ledger accounting is necessary, and general ledger accounting is only necessary to process the information in the control. Clear? This is called data flow. Then we have to understand one more concept, controlling object. So it is the entity for which the information is maintained in controlling. That means here, if you go back to FI, we have processed the expenses and revenues with reference to each GL account in the general ledger accounting. Then we process the purchase invoices, payments, right, advance payments, and other transactions relating to vendor with reference to vendor master record. In account receivable, we have processed all the business transactions with reference to customer master record. In asset accounting, we have processed all the business transactions with reference to asset master record. Similarly, in controlling also, there should be something with reference to which you have to maintain the information. You have to analyze the information. That something is called controlling object. Here, maintain, process, and analyze. These are the three keywords in controlling. Maintain, process, analyze. Of what? Information. Maintain the information. That means how to maintain the information, how to process the information, how to analyze the information with reference to something. That something is called controlling object. And these controlling objects were already defined in the system. Right? So with reference to all these controlling objects or some of the controlling objects only, we can maintain the information, we can process the information, we can analyze the information in control. So the system maintains the information for each controlling objects through primary cost element and secondary cost element. Forget about, for the time being, what is primary cost element and secondary cost element. We will discuss later on clearly what is the primary, what is the cost element basically, and what is the secondary cost element and primary cost elements later on. Then the controlling objects were already defined in the system. So we can use one or more of the controlling objects for maintaining the information according to the client requirements. The following are the controlling objects defined in the system. Number one, cost center. Cost center is one controlling object. So with reference to cost center, we can maintain the information, we can process the information, and we can analyze the information. Where in the cost center accounting. So cost center accounting is one major module. Cost center accounting is first module in the controlling, right? So in the cost center accounting, we maintain the information, we process the information, we analyze the information with reference to cost center. Then internal order. So with reference to internal order is another controlling object. So with reference to internal order, we maintain the information in the internal order accounting. Similarly, cost object. So for the cost object, we maintain the information in the product costing. Then profit center. For the profit center, information is maintained in profit center accounting. Then profitability segment. For this, the information is maintained in profitability analysis. So cost center accounting, internal order accounting, product costing, profit center accounting, and profitability analysis. These are the major modules. These are the major modules in the controlling component. For all these 5 modules, sub-modules, there is one base module which is called cost element accounting. So through cost element accounting only, the information is flown into other modules in controlling through FI. Clear? So here I am going to give you the overview of all these 5 modules now, but we have the separate modules, and these are the 5 sub-modules we are going to cover in the controlling component, right? So number 1, cost element accounting. So it is the base module in controlling through which the information is maintained in the controlling component for each controlling object. See here, actually, it's very simple module. For every expense account and revenue account, we maintain a cost element master record in the cost element account. That's it. That is what exactly we do. That means every expense account and revenue account is created as a cost element in CO. That is done in the cost element accounting. That's all. It's very simple module. Then cost center accounting. So from now onwards, these are all the major modules. So cost center accounting. This component is used to find the origin of the cost. That is, which department, which plant and machinery, or which manufacturing process, or the phase of manufacturing process is responsible for incurring the cost. Do one thing. Some wording is missing there in the material. Here, which phase of the manufacturing process is there? No. After that, you please add is responsible for incurring the cost. Is responsible for incurring the cost. It is also possible to find and analyze the variances for each cost center. Here, using the cost center accounting, you can find out the origin of the cost. That means where exactly the specific costs are incurred in your company code or in your organization. Where exactly the specific costs are incurred in your organization. See here, the main purpose of this controlling component is to analyze the expenses and the revenues, to find the ways to reduce expenditure and to find the ways to maximize the revenues, to maximize the profits. Suppose, if I want to reduce the expenditure, what is the basic information I should know? First of all, I should know where exactly the expenses are incurred. Suppose, take my personal case example I have taken, right? I am earning 50,000 now as a salary. Now I want to increase my savings. For that purpose, first of all, I should know on what and what I am spending my 50,000 every month. On what expenses I am incurring this 50,000 every month. So unless I know how much I am spending on every expenditure, how can I control that? So during the analysis, I came to know that on entertainment, I'm spending every week 2,000 rupees. So when I know that I'm spending 2,000 on entertainment, then I can analyze, is it possible to reduce this expenditure? Then you start analyzing. If you don't know where and where you're spending your 50,000 rupees, how can you analyze? That's why basically, if the company wants to analyze the expense and revenues, first they have to know where exactly the expenses are incurred. Say for example, see here, you have the administration department, right? Then sales department, then factory department. So you have the 3 departments. So here, there is one basic difference between cost accounting and financial accounting. Remember, the controlling component is nothing but your cost accounting, nothing else. So basically, there is a difference between cost accounting and financial accounting. So in the financial accounting, we account for expenses, and in cost accounting also we account for expenses. But while accounting for expenses in financial accounting, always we consider the nature of expenditure. Remember, while accounting for expenses in FI or in financial accounting, always we consider the nature of expenditure. But in cost accounting, while accounting for expenses, we consider the purpose of the expenditure. That means, say for example, administration department. We have paid a salaries of 1 lakh in the month of September. For the sales people, we have paid a salaries of 2 lakhs. Then for factory department people, we have paid a salaries of 5 lakhs. So we have paid salaries to sales department people, administration department people, and factory department people. Now they are to be accounted in FI and CO also, and I mean cost accounting also. So while accounting for expenses in cost financial accounting, we consider the nature of expenditure. What is the nature of this expenditure? Salaries. So salaries account is debited in the financial accounting. But in cost accounting, what is the purpose of these salaries? What is the purpose of this expenditure? For the purpose of administration department. So in cost accounting, the same 1 lakh salaries is taken as part of administration cost. Similarly, when you're accounting for the payment of 2 lakh salaries, based on the nature, salaries account is debited in the financial accounting. But in cost accounting, the same 2 lakhs is taken as part of the sales department cost. Then factory department, we have paid salaries of 5 lakhs. What is the nature of expenditure? Salaries. Oh, so salaries account is debited in the financial accounting. But what is the purpose of this 5 lakh salaries? Factory department. So the same 5 lakh salaries is taken as part of factory department cost. So what are your total salaries in the month of September? 8 lakhs. Your total salaries are 8 lakhs. That is reflected as a balance in the GL account, salaries account in FI. But in the controlling, using the cost center accounting, you can know that out of 8 lakhs, 1 lakh was paid to administration department. Out of 8 lakh salaries, 2 lakh was paid to sales department. Out of 8 lakh salaries, 5 lakhs was paid to factory department. That means 1 lakh has been incurred in the administration department. 2 lakh salaries has been incurred in the sales department. Factory department, 5 lakhs has been incurred. Now you can analyze, is it possible to reduce the salaries in administration department? Now you can analyze, is it possible to reduce the salary expenditure in the sales department? Is it possible to reduce 5 lakh salaries in the factory department? You were just analyzing. If it is not possible, leave it. But first you have to analyze, no? So if you want to analyze, first we should know which expense and which expense are incurred. In this particular example, in which department, how much salaries you are paying. Suppose if you look at the total salary, 8 lakhs, what you can analyze. But if you bifurcate that 8 lakhs total salary according to departments, then you know in this department we are paying this much salary. In this department we are paying this much salary, and so on. So when you have this information so in the sales department we are paying total 2 lakhs. Okay. How many staff is there? How many representatives are there? And what is the area covered by each of the sales representative? Is it possible to increase the area to be covered by for every sales representative? Presently, we are having 10 sales representatives. So is it possible to increase the area to be covered by each of the sales representatives so that the total area covered by the 10 sales representatives presently can be covered by 9 sales representatives? In that case, we can retrench the 10th sales representative. Suppose if it is not possible to retrench him, we can employ him in another department for other work. In that way, the total salaries in the sales department is coming down, no? That's how we can analyze. So for that purpose, we need to know which expenditure is incurred in which department. That information is provided by the cost center accounting. So how it is going to provide this information? I will show you clearly along with the configuration in the cost center accounting. Then internal order accounting. This component is used to collect and analyze the costs according to the event, task like trade fair, distributors meet, dealers meet, installation of plant and machinery, etc. That means here there are some certain events. So the management wants to know the cost of these events. Say for example, we have participated one trade fair which has lasted for 2 months. So in order to participate in the trade fair, you have to incur some expenses. You have to recruit some employees temporarily. You have to spend on advertisement activities, advertisement material. Then to every visitor who visits your stall in that exhibition event, you are distributing some free gifts. So all these are expenses for the company to participate in exhibition. So once the exhibition is over, the management wants to know what is the cost of participation. What is the cost of participation? For that, we need this internal accounting. Similarly, some electronic companies, electronic goods manufacturers, or some other companies like FMCG. Say, for example, Sony company, Videocon International, then Sanyo, LG. So these are the companies which conduct some dealer meets after the end of every fiscal year. See here, say for example, LG company. LG company is selling all its products throughout the dealer network throughout India. So without dealers, the company could not have been able to achieve this much turnover. Right? So because of the dealers only, we have been able to achieve this much turnover and we have been able to achieve this much profits. That's why, as a sign of showing our gratitude towards the dealers, after the end of every fiscal year, right? It seems that Lakshman, can you mute yourself? Yeah. So after the end of every fiscal year, they conduct the dealer meets in big 5-star hotels for 2 days or 3 days. Every dealer, even the remote village dealer, is also invited to the dealer meet. So the dealer meets, say for example, these dealer meets are conducted in the capital cities of the states. Say for example, Telangana, right? So in Telangana, we have the 150 dealers. So the capital for Telangana is Hyderabad. So all the 150 dealers are invited, right, to Hyderabad, and they are provided with the accommodation, lunch, and dinner facilities in Taj Deccan for 2-3 days. Taj Deccan. And during their stay in Taj Deccan, they arrange some entertainment activities and they arrange some local sightseeing programs for 2-3 days. Everything is free for 150 dealers. And all these are involving expenses to me. I have to pay for the room rent. Then I have to pay for the entertainment activities. And also at the end of the meetings, the company will distribute some good gifts, some expensive gifts sometimes to all the dealers. So all these are expenses to me. So once the dealer meet is over, I want to know, as a management, I want to know what is the total cost of conducting this dealer meet. So in India, we have the 29 states, right? So for every state dealers, we organize the dealer meets in the same way. So once the dealer meets are over, I want to know what is the cost of conducting this dealer meet. And some companies, they conduct the distributors meet in foreign countries also. So like that, once these events are over, we want to know what is the cost. For that, we use the internal accounting tool. See here, cost center accounting and internal accounting, they are called overhead cost management tools. Overhead cost management tools. But what is the overhead cost? Don't worry, I will explain. But remember, cost center accounting and internal accounting, they are called overhead cost management tools. And using these tools, we can provide the information to the middle level management. We can provide information to the middle level management. Clear? Then we have the profit center accounting, then profitability analysis, then product costing. So profit center accounting, profitability analysis, and product costing, using these 3 tools, we can provide the information to the top level management. Right? So here, What is this profit center accounting? This component is used to find the profits according to products or product groups or strategic business units or any internal area of activity according to the requirements of the management. Already explained you how profit center accounting is significant, right? So if the company wants to increase the production of a particular product, first they should know what is the profit contributed by each of the product. So for which purpose we cannot use the P&L account of FI. So in FI, the profits are to be bifurcated according to a company as a whole. That's it. It is not legally required to bifurcate the profits according to products. That's why we don't pay much attention in FI on the distribution of the profits according to products. But the management wants to know what is the profit contributed by each of the products. For that purpose, we use the profit center accounting. So how that profit center accounting helps to print the profits according to products, we have the separate discussion for 3-4 days in the profit center accounting module. Then profitability analysis. This component is used to analyze the market segments which can be classified according to products or customers or orders, etc. That means, suppose for example, we have the 25 customer groups. You have 25 customer groups. So for each customer group, I want to know as a management, I want to know what is the sales revenue. Then what is the sales quantity for each customer group. Then suppose we are giving different payment terms to different customers. So customer group wise, what is the cash discount available by each of the customer account group? And sometimes you are paying the freight up to customer destination. You are bearing the freight up to customer destination. In that case, customer group wise, what is the freight paid by me? Customer group wise, what is the cost of manufacture? Customer group wise, what is the profit contribution? Similarly, product group wise, I want this information. This is called external market segment. So using the profitability analysis, we can analyze the profits of the company according to external market segments. And this information is very much necessary for the marketing departments, sales departments, product development departments, product management departments, corporate planning departments, etc., etc. Suppose you have the 5 product groups. So if you know the sales revenue from each of the product group, then we can identify the product group which is contributing very low sales. Then why this product group is not earning much sales for the company? This is to be analyzed by the product management department and the product development department. So how to increase the sales contribution from this particular product group? For that purpose, what are the new features to be incorporated in the product group existing? That is the job of the product development company. Product development department. Are you getting my point? The sales department also has to think how to improve the sales of this particular product group. Why they are contributing low sales to the company. So like that, the information provided by the profitability analysis is very much useful to the sales department, product management department, marketing department, and so on. Clear? How? Here I'm just giving you the overview of the controlling. That's it. So we will deep into every module separately later on. Then product costing. This component is used to find the standard cost per unit of output and to find the actual cost of the cost object, to calculate the work in progress, and to calculate the variances of the production orders to settle the variances. Here in controlling, right, the main outcome in every module of the controlling is generation of variance reports. Generation of variance reports. Variance report means the report showing the differences between actuals and targets. So in every module, the main outcome is variance reports. And these variance reports are analyzed by the management. Say, here I told you that the controlling component is always concerned with analysis of performance. Analysis of performance means deciding whether we are working up to the standards or not. So how do you decide whether you are working up to the standards or not? For every performance indicator, we set up the standards. For every performance indicator, we set up the standards. They are called targets. Say, for example, this year, right, we are planning to produce 1 lakh number of units. So for 1 lakh number of units, the total cost should be 10 crores. This is the target. But actually, we produced 10 lakh units. Sorry, we produced 1 lakh units. No issues about it. But the actual cost is 11 lakhs, 11 crores. Target production is 1 lakh units with the expected cost 10 crores. But we produced 1 lakh units, but with the actual cost 11 crores. So how much is the actual cost? 11 crores. But what is the targeted cost? 10 crores. How much is the variance? 1 crore. So this is called unfavorable variance or negative variance. So in case of expenses, right, if the actuals are more than the targets, then that is called underperformance or inefficiency. But in the case of revenues, if the actuals are more than the planned, then we say that is efficiency or good performance. Following, like that, in every module, we set up the targets. Then we do the settings for identification of actuals. Then actuals are compared with the plan or targets. Then the system automatically generates the variance reports. So using the product costing also, right, we can find the standard cost per unit of output. What is the purpose of the standard cost per unit of output? Right, from the layman language, first I will explain. The standard cost per unit of output is used in the tenders. When you have to participate in the tenders, right, first of all, you have to find out the standard cost. That standard cost only can be quoted in the tenders. That is from the layman language. But from the accounting perspective, right, there are many purposes of finding out the standard cost per unit of output. That I will show you and explain you in the product costing. Similarly, we have to calculate work in progress, because when you prepare the periodical balance sheet and P&L account, the work in progress is to be displayed in the balance sheet, right? So how that work in progress is calculated? That is calculated in the product costing of controlling component. So like that, the purpose of product costing is to find the planned cost, to calculate work in progress, to evaluate work in progress, and to find the actual cost. Clear? Now, so these are the controlling objects. What are the controlling objects? Cost center is a controlling object. Internal order is a controlling object. Cost object, profit center, profitability segment is the controlling objects, right? Now, the controlling object receives the information from every module as follows. Each controlling object receives the information from many modules. Like, for example, raw material consumption from materials management, MM. So there is one module which is called materials management. So the materials management module is responsible for procuring of materials, and when we procure the materials, they are to be kept properly in the warehouse. That is called warehouse management. And whenever there is a requirement for any material in the production, that material is issued from the materials management. That means when the materials are issued to production, right, the MM end user will enter that material issue to production in MM module. Through process of integration, when the raw material issue is entered by the MM end user in MM, the raw material consumption GL account, which is maintained in the general ledger, is updated in FI. That means what? Raw material consumption is originally incurred in the materials management, right? So from the materials management, it is updated in the general ledger accounting through integration. So from the general ledger accounting, it is transferred to control. That means where originally the raw material consumption is happening in the materials management. So from the materials management, it is updated in the general ledger accounting. From the general ledger accounting, it is transferred to controlling component. That's why we say that the raw material consumption expenditure is taken from materials management component. not only raw material consumption, all the material procurement related expenses like freight inwards. Suppose if you are importing the materials, import expenses, then you pay some taxes, which are called input taxes on the purchase of materials. Like that, all the expenses relating to raw materials are originally incurred in the metals management. From the metals management, they are updated in the general ledger through integration. From the general ledger, all these expenses are transferred to controlling component. Then depreciation from asset accounting. Already we have seen, we have executed the transaction code AFAB transaction code. We have calculated depreciation, right? So how the depreciation account was updated in the general ledger, we have seen already. Then the depreciation will be taken from the general ledger accounting to financial accounting. The depreciation will be taken to controlling. That means originally the depreciation is calculated in asset accounting, right? From asset accounting, it is transferred to general ledger accounting. From the general ledger accounting, it is transferred to controlling component. Clear? Then revenues. Revenues means sales revenues. Revenues and sales deductions from the sales and distribution module. Revenues and sales deductions from the sales and distribution module. Sales deductions means the expenses related to sales. They are called sales deductions. Here we have a separate module in SAP like SD, sales and distribution. If you remember, in account receivable also I told you one point. When the sales and distribution module is implemented, the account receivable is used to process only the receipts from the customers. And the sales orders, sales revenues are processed from SD. If the SD is not implemented, then all the transactions related to account receivable are processed from AR only. That means when the SD is implemented, sales revenues are posted in SD only. FI end user will never post the sales revenue. SD end user only will process the sales revenue. Then through the process of integration, sales account in the financial accounting is updated because of the integration. So how MM is integrated and SD is integrated. This also will cover in our curriculum. Don't worry about it, right? These are the two major integrations in the also important. So we cover them later as a part of our curriculum. So here what you have to understand is the sales revenues and the sales related expenses are originally incurred in the sales department, sales and distribution module. Through the process of integration, these sales revenues and sales related expenses are updated in the general ledger through integration. From the general ledger, all these are taken to controlling. Then personal cost from human resources accounting. So there is one sub-module in HR. You know HR module, right? So you know means you have the information that you have the HR module in SAP, right? So the HR module, in HR module, we have one sub-module, payroll accounting. So at the end of every month, the user executes the payroll. As a result, the salaries account, wages account, contribution to PF, contribution to ESI, and contribution to other legal funds of the employees are automatically updated in the general ledger accounting. So from the general ledger accounting, they are transferred to controlling. Then production information and production planning schedule from the production planning and controlling module. See, production information and production schedule from the PPC, production planning and control. Then quality management expenses will be taken from quality maintenance. Then repairs and maintenance is taken from plant maintenance module. Like that, many expenses will be transferred to controlling from the respective modules. Then what is taken from FI? Directly, all the expenses other than the above will be directly posted in FI general ledger, and from there they are transferred to controlling component. So these expenses are called overheads. Overheads from financial accounting. So this what is overheads? This is the most confusing concept to everybody. That's why I will explain. I will take nearly half an hour to 45 minutes to explain you the concept of these overheads from the academic point of view. So if you understand, if you have the good understanding of the overheads concept, understanding the controlling component is very easy. Without knowledge of this overheads concept, you cannot understand controlling, right? With much clarity, what I mean to say. That's why for next half an hour or 45 minutes, I will explain you the concept of overheads. But this I will do in tomorrow's class. Anusha, any questions? Jakir?
No, sir. Thank you.
Okay. Chandan?
No, sir, not yet.
Okay. Hari?
No, sir. Thank you.
Okay. Harita?
No, sir. Thank you.
Okay. Lakshman? Sunil? Sunil? Sudhakar?
No, sir.
Okay. Vijay Gandhi?
Nothing, sir.
Okay. Okay, then see you tomorrow same time.
Sir, one thing, sir.
Yeah, tell me.
So this instance is not working, sir.
Yeah. See, the server, did I give you the new server access?
No, sir.
Okay. Actually, the server was damaged. So we installed the new server. I will send you within a couple of minutes. Okay.
No problem, sir.
Okay.
Right, sir. Okay.